Hello, it's Cathy Stacey here. I'm doing an update in regards to the forecast made by Akhil Patel and Phil Anderson from Property Sharemarket Economics. They've actually been forecasting gold since 2013, or probably before that, but I've been able to find their forecasts from 2013. I've put together a report for our Property Sharemarket Economic members. And I've shown where what those forecasts were, and then what they've done in actual time since 2013. Now, Akhil has also done a gold report leading into 2021 and beyond. But this video today is really to accompany the report that you can have access to when you become part of the Property Share Market Economics family, and you can do that in the links below. So let's get started. This is the start of the forecast that Phil and Akhil did back in 2013. This first one was done on September 29, 2013. I will have the links to these reports below. If you scroll down on the YouTube site, you'll see the links and you'll see the full report when you click on that link. On page 2 of this particular forecast, Akhil and Phil, I said Fakil then, like the two of them are together, Phil and Akhil, said on the longer time frame, over the course of years, it's hard to see where gold would see higher prices in the immediate couple of years ahead. Now, the immediate couple of years ahead would be 2014 and 2015. They talk about the next emotional pressure point for highs being 2019 and 20. And they also highlight back in 2013 in regards to the panic years to look at for 2019 and 2020. It's quite prescient, really, if you had the heads up back then of what was due to occur and what did actually occur in 2020. All right, the next forecast was 2 months later in November 12, and they talk about the near-term strength in gold into 2014, a low in the middle of the decade, and again, that strength into the latter part of the decade with high rise in prices in 2019. This is what happened, you know, this is where they've did their forecast, September, November 2013. There's that near-term strength into 2014, fantastic. Now, I find this to be really interesting. Here's the low in the middle of the decade, as they said. And here's the higher prices into the latter part of the decade in 2019. Exactly as they suggested. Very interesting, but how would you, or how could you trade this kind of information? Well, I've just got a couple of options, you know. The first one, in Australia, you could use this type of gold ETF, exchange traded fund. If you did do that, you would have seen also this near-term strength into March 2014. This particular ETF, I've got a US one for you coming up, but this particular Australian ETF follows the gold price. You've got this near-term strength into March 2014, but again, it's, you know, they've got hard to see gold having higher prices in the immediate couple of years ahead. Well, it didn't, you know, the immediate couple of years ahead, 2014, 2015, you've got this low here, and it wasn't till after the low in the middle of the decade where you had the price breaking up past these resistance levels that we had in 2012, 13 and 14. Higher low in 2016, and you know, you've got this real lift in prices from the middle of the decade and into 2020. Now, if you simply put your money in the middle of the decade, December 2015. And I say simply, of course, none of this is simple, but if you were a longer term investor and you were following these forecasts, you put your money in the middle of the decade in that low, you would have seen a 100% increase in your return on investment at that August 2020 high. Now, what happened with the US ETF? Interesting, there's again that near-term strength into 2014, the decisive low in the middle of the decade, December 2015. You would have got a 95% increase if you just put your money in then and held on to it into the high in August 2020. Now, how would you have known if there's going to be a high in August 2020? Well, for Property Sharemarket Economics members, they did get a heads up. This was a forecast that Akhil did in February 12, 2020. You do need to be a Property Sharemarket Economics member to get this report, but you know, I've got an extract for you here. So on Feb 12, Akhil said, February is often a month that sees a temporary change in trend. He says we are at an important price level. Now that important price level he's alerted us to is 1704. He's also saying it doesn't guarantee a turn in the market and a complete change of trend. He's also saying to look out for some consolidation in price. So this is more of a watch and see. And if you were a short-term trader, you could use this information along with your own entry and exit rules. Let's see what happened. So it was early on in February when Akhil did this forecast. You've got this important price level here. You can see how it hit that price level, 1701, 1704. We had a consolidation in price into March. Again, it's hovering around that important price level that Akhil mentioned. And it wasn't until we got past this that we had the highs later on in the middle of the year. Now, on the 3rd of August, Akhil did another update. Now, he's being a bit more specific this time for our members. He's saying gold is approaching a peak, a setup for a double top. Now, for those new to markets, a double top could be, well, you'd look for an alert for a reversal. A double top or a double bottom is a likelihood of a reversal in trend. He says expect gold to rally to 2000, but not much beyond that. And once it reaches that peak, gold may not come down very significantly, very quickly. Let's see what actually happened. There's the rally into the middle of the decade. The actual peak was in August at 2100. So Akhil said 2000, it got to 2100. And I just, before I show you the next slide, I just want to highlight to you that that 2100 mark is actually the low in the middle of the decade of 1046. Whoops, let me go back. Of 1046 times 2. And you get that 2092 plus that 2100 mark. That's in hindsight, like, wow, but it shows us that this level and the date of December 2015 is quite strong and perhaps something to watch for the future. Okay, here's the peak later on in August at 2100. Now, if you were already in the market, it would have been a great time to have taken profit if that was your strategy to do that. Akhil said gold may not come down very significantly very quickly. And what you may have then wanted to do is just confirm that the trend had changed. If you didn't get out before the August top, you confirm that the trend would have changed. And that does depend on your rules and regulations, but rules and regulations, your own, exit and entry rules. You regulate yourself if you're doing this on your own. But a higher low here may have well have been a good time for you to get out. For me, this markdown here would have been a good time for me to have said, I think Akhil's right here, I'm out. But the question to ask is, has the market bottomed? Now, Akhil has given his forecast on that. If you look at this chart, it's up until today, the 22nd of February, we have a lower bottom here. There's a low here in December. We've breached that low briefly just a couple of days ago. Lower highs, lower lows. At this stage, it doesn't look like the low has come in at this stage. Now, Akhil has given his forecast when he thinks the low will come in, as well as what he believes the gold price is going to do for the remainder of the decade. Now, if you are super interested in all this kind of information, we'd love you to join us as a member of Property Sharemarket Economics. The links are all below. Any questions though, also shoot them through to us. Thanks a lot.